Morning, everybody. How are we doing? Morning, Stevie. Morning, Ladder. How did everybody get on with FOMC last night? Everybody survive? Everybody still here? No casualties? I was a casualty last night, a big casualty. We should not discuss FOMC anymore in the future. That's it. I'm not talking about FOMC ever again. Morning, Adrian. So that was a whippy nightmare, wasn't it? Good opportunity to make money yesterday, if you knew what you're doing in FOMC. So we had this. Where's my pen gone? Come here. So there's FOMC. There's your press conference. Yeah. So remember I said yesterday, FOMC, the rate announcement is not the news. The news is the press conference. That's the press conference. So very, very, very nice long. I got on this somewhere around there yesterday, and I got out, I think it was there. So I got that much. But before that, I had a nightmare on the DAX yesterday. I ended up 2.5K down off the end of the DAX. So the DAX yesterday basically killed me. I just got whipped to death on this. I had so many opportunities to make money on the DAX yesterday. 400s, 500s, 600s, 700s. I just had loads of opportunities to make money. And I stupidly didn't take any of it off. And I tried to let it run, and it all stopped out at break even, frustrated the hell out of me, and ended up 2.5 grand down. So I thought in FOMC, what I'll do is I'll try and scalp FOMC and try and get some of that back, half of it maybe. So I ended up 3,800 down. So we won't discuss FOMC anymore. It's only 3.8%. It's not the end of the world. Yeah, I do 10 to 15% a month. So in the grand scheme of things, it's not a problem. It's just it happened yesterday in one day, which is not good. So lesson learned, do not try and scalp FOMC if you're on a down day. My my revenge brain got the better of me yesterday. If this was a live account, I wouldn't have done it. And I did not trade FOMC on my live accounts. But this is a proper valuation. It's a game, isn't it, at the end of the day, at the moment? Until this becomes a funded account, this is a game. And I was playing the game. So I'm going to play the game again this morning aggressively. So I'm going in with double risk this morning on the DAX. There's a reason for this. There is a reason behind my madness. Actually, I've just realized that's $1,000 a trade. That's 1%. That's too much. Hang on. It's a little bit over leverage, that is. I'm going with 0.6. So what we tend to get after FOMC on the indices is quite a strong move a lot of the time. So the 15-minute pre-market open today, we do quite often get a whip. But we also, if you look at it, go back and look at it, we quite often get a strong move as well. So I'm looking basically to try and take advantage of the pre-market today. And it's basically because the DAX basically is closed when FOMC comes out. So what we tend to get is all of the orders and repositioning on the German index happening the day after. So we should see some decent volatility coming through this morning. So hopefully be able to take advantage of that this morning. But if it's too whippy, obviously it's going to hurt. So nothing you can do. Now tell us what happened, part of Forex therapy. Morning, Giamond. Yeah, basically just I sat here last night watching the NAS and I saw the open. Better to look at it on the 5. Oh yeah, on the 5 minute. I saw the open here. Just mark it. Where is it? Yeah, it's that candle there. Yeah. So I saw the open go in, and I thought, right, where are we going? We've gone nowhere. We've taken out the lows. So I saw that as a liquidity run, ready for an opposite move. So I put pending orders there and there. We moved. I got in. Great. I didn't break even stop. We pulled back down. I added. Yeah, here. Looking for an average that I could get on. I didn't get the average. I got stopped out. So that was 0.75% there. So nearly 1% loss on that one trade. Then I saw them break that low and hold. I got in short. Yeah, assuming that this was a double-ended stop run and we were actually going to take it south. Then we got that. Then, so that was 0.5. So I was 1.25 loss. Then I flipped, I saw this. So this was the press conference finishing. I flipped long. Yeah, I got in on that candle close just with a buy order, flipped long, added, and got out here. But by the time I was here, I didn't have enough leverage really to get a full size position on. So these were 0.1% risks. These were 0.25%. Whoops, can't type today. 0.25% risks. These went on at 0.1s. So what I actually got was a 0.3 long, which I got out of. I think it was on that candle there is where I got out. Yeah, because I added, basically I got in, I added, I saw this retracement, I added here, and I got out basically with a trailing stop here. So I managed to get that much. But it didn't pay for that, obviously. And I closed out some FX as well last night. Yeah. I closed out FX positions. Look, I closed out CAD Swiss for $400 and I closed out pound New Zealand for $400. Yeah. So I actually had a lovely day on FX yesterday. I closed out I think I closed out virtually 1%. So that shows you how bad I did yesterday on FOMC. But that's what happens when you try and scalp the news. But some days it works. And the only reason I did it yesterday was because I was 2.5% down and the DAX, you know, when I came on in the New York session, didn't I? I was exhausted. I've been fighting the DAX all morning and not got anywhere. And then I got a really good position on the DAX and got $750, $800 into profit on it. And I was like, right, this is brilliant. And then it just turned tail and ran the other way. Yeah, so it's here, look, on the DAX. So I got in on this move here. I rode it down to there and I was like, yes, we're going to break the lows and we're going to go. And then it came straight back up into there and stopped me out the loss. And I was like, right, I'll just give up. This is the trade I took in the live room, wasn't it? So yeah, yesterday was a reset, basically. Right, 1 minute to the open. Big day today. So that's your pre-15. Oh, no, it's not. Oh, this is going to be hard to get on today. There we go. So this pre-15. It's quite a big range this morning. So let's see if we can get some decent movement off of this. Let's just watch what's happening with the FTSE as well this morning. FTSE's coming down very hard. Come on, DAX. Wow. Very different moves this morning on the FTSE and the DAX. We'll have a look at the news in a minute. It's massive news day today. So I'm going to decide what I'm going to trade this afternoon because I might I'm toying with the idea of streaming. Trouble is, I can't stream all of it. There's so much today. We've got obviously the UK rates, then we've got the Euro rates, then we've got the Euro press conference, then we've got the New York Open. I can't do 4 streams. It's too much. But there's a lot of news today. So part of my therapy today is I've got a load of Euro longs on. Hopefully they're going to help mitigate this. If I get 1.5% back today, I'll be happy. So it's basically put my evaluation back. I was looking to pass in 10 days. It looks like it's going to be a 15, 20 now. So but at the end of the day, it is what it is. Right. DAX is not particularly aggressive this morning. I was expecting that to be a little bit more explosive. We are only 2 minutes into the candle, but not really any direction on it. So ADRs today, we had this was lit up like a Christmas tree, obviously yesterday. US dollar went mental. We'll have a look at all the news and everything in a minute. We've got some weekly ranges hit as well. So you can look at these weeklies. We'll have a look at those in a minute. RSI dashboard lit up like a Christmas tree last night as well. So we'll have a look through everything this morning and look at the impact that FOMC had and the interest rates, the buyer scorecard, obviously, the fundamentals. Have a look through everything. Just see where we're headed this morning. Some really good sentiment trades as well, potentially. A lot of switches in sentiment direction as well overnight. But it's all going to be changing again today. There you go, long. Look at that. Did you see that spread? Did you see that? That spread. As soon as it got outside that spread doubled to grab me into that position. Look at that. Blimey. Not seen that on my Forex funds before. I've usually got a fixed spread. This doesn't change, this spread on the DAX normally. I've not seen that spread like that before. So long DAX. FTSE's rejected the Asian lows. Wow. Looks like I may well be going short. I had the same spread spike. Offset was not far enough. Well, my offset was 1.5 points, but they still spread it by 1.5 points. The reason I have a 1.5 point spread is because I have usually a 0.5 point spread on the DAX. So it's got to go, pretty well above to get me in. But that was I've not seen that before. That was almost as if they knew my order was there when they were grabbing it. No, can't be. It's not in their interest to spread orders in. They're not a broker. Uh, 30 seconds till the 5-minute is in. So your 5-minute ORB today is pretty much the same as the pre-market 15. It's that instead of that. So your 5-minute opening range is pretty much the same thing today. If you're taking the 5-minute. Okay. So no indication whatsoever off of the opening cash balance so far. So we see where we go off the second 5. So it is a pretty good open size-wise. What's that US? What's the euro up to? Where are we? Euro. Euro's bearish. Wow. Strong Swiss franc this morning. Let's just quickly check the news while we're waiting for that to do something. So obviously yesterday, FOMC, we got the 4.75, which is fine. Go back. Where are we? Here we go, 7:30. So this is obviously, let's cover the news first. So obviously, the 4.75 we got yesterday, as expected. Market's just factored in what it was expecting. That's fine. Press conference we'll have a look at in a minute. So 12 o'clock today, we've got the rates for the pound expected to go up to 4. And then at 1:15, an hour and 15 minutes later, we've then got the euro rates going up by 0.5% as well, to 3. Then after that, we've got the ECB press conference at 1:45. So this is exactly the same as FOMC. They release the rate. 30 minutes later, they have a chat about it. So we're releasing the rate for the euro. 30 minutes later, we're having a chat about it. This is your market moving event today, 1:45 for the euro. Yeah, we don't have a press conference here, but we do release the monetary policy statement and the monetary policy report, as they call it. So this is kind of like the press conference, but Bailey doesn't stand up and take questions. So you get a lot more movement off of the pound straight away, whereas the euro move is usually delayed by half an hour. We've also got Jordan speaking a little bit later on. Very rare we hear from Jordan. The SNB, Swiss National Bank, are very, very cagey. They don't give out much information. So when Jordan speaks, the market tends to listen because the Swiss is obviously one of the main hubs that we get a lot of money going through. So it'd be interesting to see what the stance is there on what happened to the SNB and what their projections are moving forward. So there's a lot of massive market moving and impactive events potentially coming up today. And then tomorrow we're into unemployment rates for the US dollar. So that's what's coming up today. Going to be a busy one. Stopped out of the long. Great. Good start. Do you know what? I think I might have another one of those days today. I've never blown an evaluation in 2 days. Hopefully this isn't going to be the start. So we've got an initial whipsaw going in at the moment on the 15-minute pre. That was a trailing stop. So my initial stop was down here, so that's just trailed. So that's why that took me out. I might I might do some testing on trailing on the opening range. And using that as a trailer, because that instance there where we've got stopped out there, that wouldn't happen if the trailer was based on the actual opening range. Might be worth investigation, that, just to cancel out some of these silly losses you get. 20 seconds left, so I'm going to put another pending on because we haven't broken out yet. So see if we can get another breakout. Please don't close outside of the opening range. That means I'm going to have to put it on manually, and that'll be very annoying. Stay down, down, down. Stay. Thank you. Okay, so reset. Still waiting for the speculative traders to enter the market, and we're going long again. Okay, let's have a quick look at the DAX direction-wise. So today's levels on the DAX. Right, so we haven't got much room to the upside today. We've got yesterday's high, which is only 35 points away this morning. Apart from that, there's nothing else to look at really. Upside potential on the DAX. We're in clear skies. So if we are going to break long this morning, there's nothing to give us any guidance in any direction. So it'd be a tricky one to pick a target on that. Obviously, yesterday's high is the obvious target to start with, but picking an upside target is difficult. Downside target, obviously, yesterday's low is outside of ADR because of the FOMC move. So we've got this propulsion gap. So if we are going to get a weak US dollar continuation, we'll be pulling back down into there. But don't forget, obviously, there is the euro rates today. So that is a possibility today ahead of the ECB rates. But I was expecting to see a little bit more moves coming in this morning off of the back of FOMC. Don't seem to be getting it today at the moment. We'll give it 15 minutes or so. Nasdaq's pretty quiet this morning as well. as is the Dow. Look. Just have a quick look at earnings this morning. So, we had Facebook overnight. So what happened with Facebook last night? Oh, gone up. Facebook obviously had good earnings last night. Who else do we have last night? No one. So pre-market we got Lilly, Estee Lauder, Google aftermarket, and Amazon and Apple. So big day today for all the indices. So tomorrow is going to be busy. Right. Well, that's not particularly exciting this morning, is it? So your this is your 15-minute high at the moment. We've got 2 minutes left, and that's your 15-minute low. So basically, it doesn't matter if you took the pre-market, the 5, the 10, the 15, whatever. The range is the same for pretty much everything today. We haven't gone anywhere at the moment. So if we are going to get an ORB, obviously, doesn't matter really where you get in, does it? They're all going to do the same thing today. So I'll leave that for a minute. So looking at the Fed, US futures pricing, we'll quickly go through all this news. So the expectation on the Fed is, obviously yesterday we went up to 4.75. Yeah, so we're now 4.75. We've gone up by 0.25%. Inflation is coming down, which means that we don't have to put as much pressure on interest rates, which eases the housing market, etc., and unemployment, all that sort of stuff. So everything at the moment is going well for the US. Unemployment is not massively high. It's quite high, but not massively high, but it is starting to come down. Inflation, not massively high. I mean, it is high compared to the 2% target, but it is coming down. Interest rates are starting to reduce. Yeah. So this is all good for the economy, but not necessarily good for the US dollar. So it's important now we're looking at where the US dollar is. We've seen weakness in strength. So every piece of good news we've had coming out about the US dollar has either done that or it's done that. Yeah. Now things are starting to slow down. And if this starts to drop, the US dollar is going to do that. The stock markets will then start to rise. So if you look at what's going on with the stock markets at the moment, they are looking bullish. Yeah. So we've NASDAQ yesterday, we've got that high. Remember I said on, I think it was Monday. Till we break that high, I'm not really interested in a bull market. Now I'm sitting up and listening and thinking, right, now we may be in a bull market. S&P, we had that try to get out the highs. Yesterday, we tried to get out that high, didn't quite make it, but it's a bull market. Look at market structure. Market structure is bullish. Got that high as a target. So it is looking like, because obviously we've been talking about recession. Now everyone, including the International Monetary Fund, is saying probably not going to be a recession, apart from the UK. We are going into a recession, obviously. So we are starting to see signs of recovery here. So the bull market may be coming back, which is not going to be good for the US. US dollar, basically. So US futures are pricing in rate cuts this year. So we were talking about going to 5.25 as a max, a terminal rate. I think that's possibly now going to be more like 5, but we will see. So another 0.5% on that is the 5.25. So there's a lot of speculation in both directions at the moment. So it's quite tricky to sort of figure out which way to go with the US. But in interest rate futures hit 4.94, so they're pricing in 5 for June. We have more work to do. Full effects of rapid tightening are yet to be felt. Yeah, so we're still saying that we need to put interest rates up. We know that. 85% chance of a 0.25 hike, the 15% chance of a pause now. So instead of thinking, are we going 0.25 or 0.5, the thinking is now, are we going 0.25 or 0? Not. And that's what New Zealand dollar has just done. Yeah. So the New Zealand dollar last time did not increase its interest rates. We went to 4.25. So that's what they are now talking about potential of. Wage growth is elevated. Job market is extremely tight. Yeah. The labour market continues to be out of balance. Inflation remains to be above the goal. Yeah, it's all the same stuff. Because there's only more evidence to confirm inflation is on a downward trend. Yeah, so it's all pretty much the same sort of thing. That's basically what the Fed is giving out as messages, and what it's been given out for a while, which is why we've seen lots of uncertainty in the US dollar. Policy. Just mention that. Wages will decrease. Again, not good. Inflation's going up, which means housing prices, mortgages, and everything are upward spiral. Cost of living is going up, wages decreasing. So that isn't good, obviously. That leads to job losses and repossessions on houses. We haven't made a decision yet on the terminal rate, looking at the data. So between now and March, they're looking at March. So there's not a lot. I skim read through this as it was coming out yesterday. There wasn't a lot in here that I could see that was particularly bullish or bearish, but the market certainly didn't like it, did it? Terminal rate falls under 4.9. Yeah. Inflation falls fast when notices come. Yeah, so yeah, okay. So the CPI figures is what we really need to focus on, really. Fed swaps pricing 50 basis point rate cuts by the year end from the June peak. So they're saying June will be the peak. We're in February, so March, April, May. So another quarter. But I think probably 0.5 is going to be a max. So what's that North Korea doing? Oh, God. Kim Jong-un obviously had a few beers last night. He likes to drink a bit, doesn't he? So he's obviously getting his nuclear button ready. Okay, right. So that's news overnight. So what I read into that is confusion still. So it's still very much the same with the Fed. Nothing bullish, nothing bearish, teetering on the edge of recession. However, a definite slowdown in interest rates and a definite slowdown in inflation. So it's that curve where we get to, okay, it looks like we're going to do that. And it's how quickly that can happen is the important thing for the economy. If that comes down fast, the unemployment will stay the same. The GDP will keep going up. And obviously then they'll be able to reduce that and keep everybody in their houses and everything's hunky-dory. If the inflation starts to creep up, it means there's more pressure on doing that, which means everything becomes more unstable. The US dollar is as attractive as really you can get. And we are seeing that with the US dollar. So I don't foresee strength in the US dollar moving forward. I would see more of a decline. And I think we'll see that creeping into the COT report over the coming weeks. I think we'll see this long dribbling down, could even drop below 60 this week. But next week is when we're going to see this, obviously, because the COT figures come out on a Friday and they are reported from the Tuesday. So we get FOMC on Wednesday. So what we're going to get on Friday is what was happening on Tuesday. Yeah. So next week we get next Saturday, when I put new figures up on, when the new figures go up on Saturday, that is when we will see the real impact of FOMC. And I think we'll probably find that coming down, which means there will be no long edge on the US dollar. So that will change the fundamentals and the buyer scorecard quite significantly. So we should see strength coming through in the euro. I think the euro is probably going to take over, and possibly the Swiss, and could be the yen, take over as the stronger currencies moving forward. But we need to see what happens with the euro rates, and especially this afternoon, we need to see what Lagarde says. That's going to be the key. If she is massively bullish, about how the euro is going. We can increase our interest rates by another 1% to curb inflation, and jobs are good. Everything else is good. Economy is good. GDP is good. Euro is going to get hammering up to the upside. Pound, I don't care what that comes out as. Pound's coming down. Even if it goes up today, it's not going to sustain it. OOB to the upside is on its way. So DAX, careful here with the DAX. 25 points. There's not a lot of room to the upside on this DAX. I don't like it. Much prefer it down there today, but we'll see. There's no strength, is there? So plan for today. If you're in any euro pair, so what I did yesterday was I stuck the EA on. Hello. Some more positions. So euro pound. Oh my God, this is slow, isn't it? Euro pound, I'm going to be getting in long. Euro CAD, I'm going to be getting in long on the next reversal alerts. Swiss yen, I am in long already. So I'm looking to buy the Swissy, and I'm looking to buy the euro basically at the moment. Reason being is those are the top sentiment buys at the moment. So the euro CAD and the euro pound, we now have COT on side with us and retail offside with us. Yeah. So these have turned into +6s, euro CAD and euro pound. We've got the rates coming out today for the euro. Yeah. So if we're going to get preferential rates, we know that we're going to get what we expect on the rates. It's what Lagarde says, which I think is probably going to have the opposite effect to what we saw with the US dollar yesterday. So I'm longing that. I've got a pound New Zealand short already on. So those are the top sentiment buys at the moment. So I'm going long with those at the minute. From a directional bias, if you look at the euros, euro pound is a strong buy. The reason I'm longing euro pound at the moment as well is what I'm anticipating today is, even though the interest rates should come out as expected, we'll get a positive move on the euro and a negative move on the pound. So the market's been dropping a little bit on the pound ahead of the rates, which is quite often an indication that it will come down. But if you look at the euro, it is neutral to long everything, whereas it's a little bit negative against New Zealand dollar, but that was before we saw the New Zealand dollar figures. And it's a negative against the US dollar. But obviously with what happened yesterday, that is going to change, I think. I think we're probably going to find that we're going to start to get a positive creeping in here. So I'm basically long euros at the minute. And the idea being today is I want to get some decent movement off the back of this news. So the pound, if we can get a negative move on the pound, euro pound, I'm going to get in long. And then if we can get some strength coming out of here and off of Lagarde, there's a good chance of getting a 200 ADR move on the euro pairs today. DAX is off, heading up to target yesterday's high. If we break yesterday's high, we got a good chance of a runner today. Like I say, this is what I was waiting and expecting to happen. I was expecting it to be one of those candles, though. You know, the first 5-minute candle to be a flyer. This is delayed reaction. But this is the opening rate. This is the logic playing out right now. This is a really good example of the logic behind the ORB setup. The ORB setup is, this is the banks executing orders. This is the banks making money. Yeah, look at the speed of the movement when they try to make money as opposed to just doing what they're told. You know, you come in the morning, you've got a job to do. All right, yeah, let's press the button on all these orders. Everybody wants done. Right, now let's make some money. Yeah, this is the banks making money. So We're coming straight up into yesterday's high. We're going to tap this fast. Look. Okay, so there's yesterday's high. Should expect to see some limit orders. So we should see some reaction here of a pullback. Okay, there you go. Straight into the highs. We've eaten them. There you go. So that's all the limit orders. You see those limit orders fire? Right? As soon as those limit orders fired, liquidity pool was put in there, which was basically everybody that just hit the limit there, shorting. This is all of them getting eaten, rolled over. What they call a rollover, basically. They just rolled over the limit orders. So you trigger 100 grand short, we go, nah, we're 500 grand long, screw you. And they puke. So everybody that hit the limit there had their stops there and they puked immediately, which is basically in, out, loss, done. We've got your orders, goodbye. So, bull market this morning. No, you're not going to hit my TP, are you? You're just going to annoy me like you did the other day and just not quite get to my TP. Now I am wishing I'd put $500 risk on each. Which one's got a TP on it? 349. Oh, they both got TPs on. No. Oh yeah, sorry, no, that one. Put that one back. Put that one back. Okay, right, I'm out of one. Oh no, I'm not. Oh, whatever. Keep going then. I don't care. Okay, well, my trading stop is pretty much coming to TP anyway, so I'm going to let that run. I'll just cancel that TP off. There's no point. I'll just let the trailer take it out now. This is going to pull back, so that'll be the trade done, basically, whatever I get out of that 2K at the moment. Blimey, that's a nice move. So this is what I was looking for at the open, but obviously it's a delayed reaction this morning. There you go. That's nice. If I hadn't have traded FOMC yesterday, I'd be pretty much break even. But I did. Because I'm an idiot. We'll do some FX analysis in a minute. Let me just watch this play out. Jeez Louise. It's a candle and a half, isn't it? I got 440 loss to suck up. I'm going to take... Which one is it? I'm going to take that one off and just let the other one run with its stop. It's going to stop out anyway, I think. So, the other thing I did yesterday, which I forgot to say, was I took an oil. So we got a big hit on oil yesterday. So that's the OLB done basically today. Well, it will be done when it's done. So that's my done. So it doesn't matter which one you took today. You're loaded. So oil yesterday, we had a really nice drop. So remember I said with oil yesterday, I'm waiting for a pullback on, or whenever it was, I said I'm waiting for a pullback. So we got that pullback, and then we pushed, and then we pulled back again. We took out that low. So with FOMC, we took out the low. We had OPEC yesterday, and there wasn't nothing came out of OPEC yesterday that I could see that was particularly bullish or bearish about oil. I'll go back where OPEC was. It was all day basically. But the only thing we got was the normal crude inventories yesterday, which was more than forecast. And these crude inventories, they come out red all the time, but they just don't mean anything now. The crude inventories are just not what moves crude. So there's nothing I could see that came out of OPEC that was any clue as to whether we should do anything different. So as far as I'm concerned, the target of $100 plus a barrel is still on the cards. Yeah, so we should be at some point this year at least taking out those highs from November, and off we go. So I'm looking for opportunities just to get in long on oil. The reason I liked this yesterday, I saw this. This was late in the day, yesterday evening, just before I went to bed. We pulled back down straight into the 61.8 retracement, and this area here. If you remember yesterday, I said, if it was yesterday or the day before, I said this is where I'm interested in getting in. Yeah, that high there, or pulling back to here. So that's what I wanted to see, a pullback into this area here. And we pulled back into it and pushed, and then yesterday it collapsed further down. So that is where I got in here. Now we've got a large propulsion move there, okay, which we've got to break through. But if we break through that propulsion move, we're going to, I think, start a run up and a retest of this area. Yeah. So I've got one on there. I've got a long position added here. So I'm going to add one. Yeah, these are 4-hour candles. Okay, so I'm going to add one as we're in this propulsion move with a view to taking one off and then trying to get a runner out the highs up there as well. So going long on oil. So this is basically just a normal market structure play. I didn't do this with the EA, but market structure, I'm looking, remember I said this is what I'm looking for. Some kind of pullback, leaving that not broken in this area, and then long. So if this structure is going to break and we're now going to go green on the moving averages, that's what I'm looking to play. So that's the play. Stopped out of the DAX. That's a nice little one this morning, wasn't it? Like that one. 2,400. That's the mother of all propulsion gaps, isn't it? That's a propulsion gap and a half. So this is, I suspect this is still going to run. But if we do pull back into here, ahead of the euro, remember we got the euro. Actually, to be honest, today I would leave the DAX alone with the euro, because I think the euro is going to pump today, which means the DAX is going to come down. So look at that for an opening range breakout. If only they happened every day, we'd all be millionaires, Rodney. David, good day. Glad to be able to wake up for a live London session. Hit TP on the Euro New Zealand dollar sell. Excellent. Currently in UJ buy. Also watching US dollar Swiss to break. Euro New Zealand sell, were you? Is that an RSI extension on the hourly? Yeah. Yeah. Yesterday. So that was the RSI extension on the hourly. 5-minute reversal alert in there. Very nice. Morning, Ritesh. Euro will go down. I don't think so. He's a ninja in fitness club. Buy Yasel. Hello. Okay. Don't understand you, but fine. Are you saying is gold a buy or a sell? Is that what you're saying? Gold at the moment, I would be buying it. Oh, DAX. If you do 200% ADR move without looking back, I'm going to cry. I'm not chasing you. You've paid me this morning. I'm very happy with you, but please don't go 200% ADR. Look at my stop loss. Look at my trailing stop. There. Yeah. Look at where it came to. There. This thing goes like, do you know what? This is yesterday in reverse, isn't it? Except yesterday, all that happened was I got stopped out in every position as a loss. Now I'm getting stopped out in a profit, and it's going to run. It's going to be the opposite of yesterday, isn't it? So yeah, gold, I'd be looking for buys. Look at what happened to the US dollar yesterday, yeah? And look what's happened to the US dollar today. You want to be buying, don't you? Because gold is across with the US dollar. If the US dollar's coming down, gold's going up. But I'd wait for a pullback or take a breakout. So your two options today on gold are pull back into propulsion, pull back, return to origin. So either that, or you can take a breakout of the Asian high. Up to you. How do you want to trade? Pick one. Doesn't matter. Go long though. Everybody in the universe at the moment is short on it, right? So if retail is hitting the short button, you need to be hitting the long button. Thanks for the follow. Funny also. That sounds like something from Harry Potter, doesn't it? Leviosa. Sonny Osa. Gold. 83% of the market is short on gold. You want to be long. Whoops, sorry. Right. Let's have a look at what's going on. So ADRs. So we'll start off with ADRs today. Now the DAX trade is over. Euro pound. I am long euro pound. So I've just got in long euro pound on the reversal alert M5. Okay. So this is a speculative move based on expecting euro to pump today. So the euro rates are going to come out as positive or as expected. So if you look at the euro, let's take euro pound as an example. Ordinarily, I would never buy an RSI extension. Yeah, I would be selling up here. But today is a different day. Today is a double rate day. So if we look at this on the 4 hour, it's a real mixed bag, euro pound. However, the market over the last month or two, if you look here, we're going back to sort of just before Christmas here. The market has basically been buying euro and selling pound, obviously, as we know. We've had a bit of a dip and a pullback. Yeah, we've had a reversal alert there, which this market structure is now starting again. We're at a double top here. Yeah, so everybody in the world is going to be shorting this up here. It makes total sense for them to pull back off of that high ahead of a rate announcement, a double rate announcement. That, I suspect, this is Liz Truss completely destroying the European economy, the pound economy. And then this is Bailey going, stop being so stupid and undoing the thing, right? So ignore this. This doesn't really exist. What we were doing before that was just pushing. And then obviously that happened and it screwed everything up. So we're just back on track now for longs, I think. It's all going to depend on what happens. So this is a totally speculative trade based on a hope that, and it's a 50-50 shot, isn't it? Everything is a 50-50 shot. But where yesterday went, I'm taking all the 50-50 shots I can get. So at the moment, I like it long because I am expecting Lagarde to rally the euro. I am expecting the pound to potentially push and drop based on the interest rates coming out as expected. The only thing that will scupper my plans today is if for any reason they go to 4.25 or Lagarde comes out at 2.75. That will really screw me today. But if those don't happen, we get the 4, we get the 3, I suspect Lagarde will be bullish and we'll get a pump. And the pound is not going to have enough in the tank to hold the euro back. So ordinarily, I would never get in on an RSI extension. You know me. I sell strength. That's me. I'm a mean reverter. So, but this is a news trade. But what I'm trying to do is get euro positions on ahead of the news so that I can get them into profit. What I would love to see today is the euro pound to break the Asian highs before 12 o'clock. And then I can at least cover this. There will be no risk. Or what I might do is put a stop. But that'd be stupid because that's an obvious target. No, I'm not going to do that because I'm not an idiot. But I might go break. I might cover it. I might go break even on it. But that's the plan. So euro pound I like as a long. Main reason is because everybody, look at this. Look at the retail on it. Let's make it easier to see, shall we? 91% of the market is short. Why is 91% of the market short? Yeah, they're all short. They're all short in the double top. Where's all the money? There. Where's all the money? There. All the liquidity for this pair is sitting above that level. All of it. Yeah, ahead of a rate announcement. There's not just liquidity up there. There's more liquidity than normal up there. Yeah, so everybody Aziz has just come on and said euro will go down. He's short. Where's his stop? There. Where's the market going? So that's basically why I'm long on that one. So euro pound, it's hit its weekly range. So this is a beautiful short. Normally, I would be saying to you, short the crap out of this. And I might be totally wrong on it. And if I'm wrong on it, that's fine. I'll scale into it as it comes down and get out of it when it pops. But depending where we are, if we're above here, then I probably will break even because there is a chance they might pull back into that and then move. But I don't know. We'll see. Euro US dollar, that's also hit its weekly range. So it's Tuesday. So we've got a move in there, 232 pips. We're a 200 ADR, AWR rather, weekly range. So again, that's already started to pull back. So if you are in that one, you haven't actually had an alert yet. No, you're not in this. We haven't had a reverse alert on this yet today. So we've got these propulsion targets here. Again, if you want to mean revert it, don't go much beyond ADR, 150 ADR at most. But this is where I'm looking to buy. Yeah, after what we had yesterday on the US dollar, I'm not sure I hold up much hope for it really moving forward. I don't necessarily think it's going to tank, but I don't think it's going to be strong necessarily either. So when you get a currency which you expect it to be neutral and the other one powers up, you get a move to the upside, obviously. So Euro US dollar, I'll be waiting to pull back into here to start taking long. So I'll be watching RSI extensions to the downside on that. So as it's extended beyond its weekly, with this, you have to obviously pay attention to it. But on a week like this, your ADRs and your AWRs don't mean anything, do they? If there's a fundamental shift happening in interest rates and bank policy, if they're coming out in press conferences saying different things, these mean nothing. Yeah, the fact that that's gone like that doesn't mean people have got a profit take. If the fundamentals shift on it, they will just add to it and it will go. So be a little careful with these when they're all US dollar based. And as you can see, they are. Yeah, the only one we have got, which is not, is the pound Swiss, which we'll look at. But these are all US dollar based. Gold is US dollar based. So, so looking at the pound Swiss tank, yeah, again, pound rates are coming out in 3 hours. You don't want to be doing much with this. Take a speculative position on it, potentially. This could go mental. Yeah, we could have Bailey's report this afternoon when the rates come out could be absolutely super bullish, laying out amazing plans for the pound moving forward. But don't forget, the IMF has just come out and said, we are looking for the GDP for the pound to contract this year, go into recession. Every other country is not going into recession. The pound is. There's no way on earth Bailey can do anything to tell the market we're okay. We're not okay. The pound is coming down. And the thing that worries me about the pound is he may come out and spike this, right? Now the IMF has come out and said officially, yeah, they're definitely going down. We might get aggressive, which means we might come out at 4.25 more aggressive, which means we will get a rally in the pound, because the interest rate makes us attractive to investors. But investors don't want to invest in an economy that is contracting. So it's a very difficult situation to read, because that makes us an attractive place to put money, because you're going to earn a very nice overnight rate on it. But you don't want to put that into businesses in the UK, because they're all going pop. So we're sacking everybody. We're all on strike because we're not earning enough money. We are. The UK at the moment is like a house of cards. I said this yesterday. I'm just waiting for the next thing to happen that's going to destroy us. It's literally not. It's doom and gloom. If you live in the UK, it's difficult when you're analysing economies and forecasts and that sort of thing when you don't live in the countries to live it. When you live in the UK and you're seeing what's going on in the UK, you know why the IMF is saying what they're saying. We're stuffed. Yeah. I make a decent living. I make a good amount of money. I've just heard this morning that our water rates are going to go up by 7%. Yeah. On top of everything else that's going up. Yeah. My outgoings have gone up by £1,500 in the last 6 months. Just to survive and run my house is costing me 1,500 quid extra a month. Some people only earn £2,500 a month. Yeah. It's not good. If I'm feeling the pinch, I'm not loaded, obviously, but I don't consider myself uncomfortable with money, so I'm feeling the pinch. Everybody is. So I can't even if we get a rate increase, I don't think it's going to be bullish pound. So pound Swiss, again, this is a weekly mean reversion, but look at this Swiss franc at the moment. Do you really want to be buying into strength like that on the Swiss franc? And if the euro is bullish, the Swissy will be bullish. This thing's going to come down. If we get a negative pound reaction and we get a positive euro reaction, we're going to see a 300 ADR on this today to the downside. So just be careful with these weeklies. Yeah, they're all based on fundamentals. And when you get an ADR on a fundamental shift, or a weekly on a fundamental shift, or you've got a 4-hour extension beyond normal ranges on a fundamental shift, that's done that for a reason. It's not done it because the market's just extended and needs to take profit. It's done it because the market is shifting direction. So just be careful with these when we're in weeks like this, because you're going to get false readings. RSIs, there's a lot of those as well at the moment. David, what on one thing, the sentiment data on the site helped me was decide what euro pair to sell. It was either euro New Zealand or euro pound, and the data steered me away from euro pound. Yeah, perfect. Exactly what you meant to use this for. Yeah, this is what the buyer scorecard is for. Yeah, if you see a setup, just this is the first place I go. So if I'm looking to short a euro, I'm going to go bang. What should I short on the euro? Euro New Zealand. Instant. I'm like, that's the worst thing. Retail's not either way. Cot's a little bit on board with it, but everything in fundamental. I don't want to be doing that one or that one. If I want to short. If I want to long it, I want to be doing that. And that's exactly what I'm doing. I'm longing euro pound right now because Cot's on board. Retail's the wrong way. We got a +5. That was my choice. My choice was I want to go long on the euro Swiss and euro pound. Yeah. Euro CAD as well, but I'm loaded on the Swissy. I really am loaded on the Swiss franc at the moment. On the on the euro. Long. So I really hope it goes up today. If it doesn't, I might be in trouble. Franco, time to move into a Dutch boat on the London River. Yep, if you can get one. You'll be lucky. Those things are going to go through the roof because you don't pay bills and stuff on them, do you? Yeah, it's not good. Let's just a quick look at the DAX. So DAX is topping out at ADR. So we got we're running out of steam, as you would expect, at the average daily range, because this is on average where we tend to run out of steam. That's what it's for. Obviously be aware, if the euro does come out massively bullish this afternoon, the DAX is going to come down hard because it does the opposite of what the currency does typically. So just be aware of that if you're looking at the DAX. You shouldn't really be looking at the DAX end at that time anyway. It's 1:15 in the afternoon. We should be starting to look at London, at the New York session and the US pairs. So RSIs, there's loads at the moment. Aussie dollar CAD is so this is one of the pairs that is not really affected. So the Canadian dollar will be affected usually in the same way as the US dollar. So when you see the US dollar yesterday coming down hard, coming down hard, coming down hard. If you look at the CAD pairs, so Aussie CAD, or let's look at the CAD pairs. CAD Swiss coming down hard, CAD Yen, not quite so much. It did come down hard, but it recovered a little bit. You tend to see you get the same reaction. So the CAD gets dragged along with the US because the US and the CAD are obviously big trade partners in the same way that Aussie and New Zealand are trade partners, Euro and Pound are trade partners. The closer proximity, the more trade you tend to do with that country, don't you? So when something's not going well in one country, it has a knock-on effect on the other country. The thing obviously CAD's got going for it is oil. And oil is expected to rally. So it's expected to get more income from its oil production, and that will be slightly bullish. But at the moment, the CAD is not doing massively well. So looking at the Aussie dollar CAD, that is a 1 hour RSI extension to the upside. So there's a good mean reversion opportunity there. That's a nice pullback as well for a market structure continuation. So for me, I'd be looking to short it, obviously an M5, but it's already gone this morning. So you had the M5 reversal in Asia and the retest M pattern. Look to trade it down into propulsion. So that's your accumulation break. That becomes your support. So there's your short. Dependent on obviously what you think about the Aussie and the CAD, but Aussie dollar CAD at the moment is range bound. You can trade it in either direction. Retail is saying to go long because retail is short on this at the moment. Yeah, so if everybody's short on it, you want to be looking for longs. So personally, what I would be doing rather than mean reverting it is if we can get down to there, I'll be looking to long it because the people that started that move are likely to add to their positions. Everybody that's shorting it has the liquidity up there. That's where the market's going to go next because that's where it needs to find the liquidity. There's two places liquidity is sitting on this chart. First is here. Second is there. Yeah, and the reason that liquidity is sitting there will be some here as well. But the reason the liquidity is sitting there is the liquidity here is in the form of buy stops. Yeah, so people limit orders rather, buy limits. So people looking to buy. I say people. I class everybody that trades as a person, but institutions will be sitting here looking to add to the positions they started here. So they haven't moved far enough to take profit. If it gets pushed back into this area, they will add more into it. So the market knows there are orders there that they can use. The market knows there's orders there that they can use because that's where the move stopped. So when moves stop, people get in. When double tops happen, more people get in. More liquidity sits there. So there's liquidity pools sitting there. There's liquidity pools sitting there. So for me, because 83% of the market at the moment is hitting that button, that's the direction it's likely to head when it needs to. So, you know, it can do this, for ages. But when it needs liquidity, that's where it's going to find it. So and again, this is not a timing tool. Yeah, this is a directional bias. It's not a timing tool. Yeah, you can go down for 3 days and retail will be right for 3 days, but eventually they'll be undone. And the move that way will be stronger, which is why we use, and it's exactly the same as with COT, yeah? That's why we use COT, because the market participants, where's Aussie dollar CAD? There. So there is no COT bias because we have them one direction on one pair, one direction on the other pair. So there's no COT bias at all on this. There's only retail. So COT is the light blue. So if you had a COT bias as well as a retail bias, that means that the futures market, the big institutional non-commercial players are longing the pair. If retail is shorting the pair, that gives them twice as much reason to go long because the liquidity they hunt will be at the high side. So that's why this, the +6s and the -6s and 5s and things, that's where you want to be really focusing your attention because you've got large market participants on side and you've got retail wrong. So yeah, Aussie dollar CAD, nice extended. So there's a mean reversion opportunity. So quite possible you're going to play it down. I prefer to get in on that one as a long. Aussie dollar, US dollar. Just quickly checking on the DAX. So we've just taken out ADR. We're getting a load of rejection at ADR still. Oops, sorry, what? Aussie dollar, US dollar, same story. So US dollar basically and the CAD. This is what I mean. These look the same. So don't take both of these. Yeah, if you're going to take one, take one. Don't take both. It's the same thing, isn't it? Look, Aussie dollar, US dollar, and Aussie dollar CAD, virtually the same chart. So don't trade both of them because you're obviously just going to double your exposure basically on the Aussie dollar. So either the Aussie dollar is going to weaken and or the US dollar is going to strengthen. If the US dollar strengthens, the CAD will strengthen with it. So this is why these moves happened in tandem, because the US dollar and the Canadian dollar will move together based on the US dollar's news. So they both leave propulsion gaps. So again, same thing here. This is where the accumulation break happened. That would be where your return to origin of the move and where people are likely to add. If it's going to be a pullback, you like to get somewhere around a 50% retracement, which will be into that second part of that move. Personally, what I would look at is 15-minute on this. Yeah, it's one big move. So somewhere in here, no idea where, somewhere in here, you're going to find people adding to the orders. Assuming this is a real move, yeah? The banks will always do stupid things and then undo those stupid things. So, we're assuming that this is the move that they want to make. And I would say it probably is. Based on the fundamentals, it's not amazing for the US, is it? So, CAD Swiss, I was short on this. I'm short on it again. I'm a little bit early on this one. So yeah, I got out of that one yesterday. So that was a nice trade from there. Got out there. This was a sentiment trade. So that was why I took that one. We were absolutely exhausted on the CAD Swiss. Yeah, still are. Still a good short. This is why I'm short. Look, 96% of the market is long in this thing. Yeah. Pound odd, I've got an RSI alert. The RSI's just changed a little bit. Yeah, 90, what was that, 96? Yeah, 96% of the market is long on this. And has been long on it for days, yeah, haven't they? They've been long on this thing for days. They keep longing it. They're all longing it now because it's absolutely exhausted. All the smart money traders are in there now, look. I'm short. That's a good place to add. That's a good place to add. All within ADR. So we're getting the pullback on the CAD at the moment. But again, Swiss franc, yeah. And a lot rides on the euro today for me. A lot rides on the euro being having a positive move. I hope Lagarde does talk it up. If she doesn't talk it up, I'm in trouble today. But anyway, I'm just trying to get back some of the losses yesterday. So yeah, CAD Swiss. If the euro powers up, the Swissy will power up, and obviously CAD Swiss will come down. So we'll see. But we've got lovely areas here. Like you can see the moves. So accumulation, break, accumulation, break, leaving us two very nice areas where we know there will be sellers potentially adding into those orders. Yeah, there's the propulsion to the upside. So again, push down, and this is why market structure happens. Yeah, this is why these things are on the charts. You can see market structure, if it's going to break to the upside with the reversal alert that we got there, nice W pattern reversal, push up into that area where there's sellers. So we reject, we push back down into the area where there's buyers, we push up again, push back down, we push up into the area where there's sellers, pushes us back down. There'll be an area of buyers here, pushes up. That's what creates market structure. That's why the market moves in that way, because it's just zones of buyers and sellers entering in. And this is a fight between these two. One of them is going to win, which would determine the direction we go in next. So it's either going to be a market structure. And that's why a head and shoulders forms. Push into an area where there's sellers, pushing back into an area where this buy move started. So the buyers add in, they overwhelm the sellers, they run out of people to buy from because there's no more sellers left. So it comes back down again hard. They buy again in the same area that they started that move. Yeah, they meet the sellers, drive the price back down again. That's the end of the market structure move to the upside. Buy cycle, sell cycle. This is all you're seeing here is just what's happening on a much smaller scale. So yeah, CAD Swiss, I'm short. I like it short. We're extended on 15 hourly. We've got a long way to go. But it's a difficult one at the moment, but this is purely a sentiment trade. The only reason I'm in this is purely on this sentiment. This is the strongest sell at the moment. So I'm selling it. If it does pull up, I'm just going to scale into it as normal. I'll get out when the retail crowd get run over. Euro pound. Again, I'm long. I wouldn't normally be long here. I'm doing this. This is making me go. Today is making me go the other way. Just purely based on the euro rates today. Ordinarily, I would not be longing here. I would be looking for short opportunities here, but I'm longing because of the rate announcement. So I potentially on the pound, we're going to get some strength on the pound, which is going to drop this. If it drops an ADR, we're going to get into this area where potentially the euro guys are going to step in and go nah, and they're going to stall the move. That's where I'll add a second. We get down there because that's going to be over half an ADR from my initial position. Oops. Which is here. So half an ADR is 29. That's 39, 40. So 29 is there. So as long as we get a reversal alert in the propulsion move, I'll be taking a second entry down there. But it is very, very extended. Look at the 4 hour. Yeah. But look at the euro pound. And again, this is why we have to have a bias. Yeah, when we're using RSI. Look at the RSI here and how extended it got. Look at what happened. Pullback. Look at what we're looking at here. That's what I'm expecting. I'm expecting a pullback, no more than an ADR before the second leg. So I'm long now. And I'm hoping that the pound weakens off of the news and they don't get their rally, which helps that happen. And then I hope the euro then does rally with Lagarde. And obviously you can't see me up there. I'm off the top of my chart. I'm drawing off the top of my chart because I can't go any higher. But that's what I'm hoping to happen. So yeah, longing on that at the moment. So it's not a tip. That's not a mean reversion. Obviously the RSI dash is there for mean reversion opportunities and trend continuation opportunities. So Euro US dollar. Franco, talk to a Forex trader today, losing. He invests thousands. Never heard of COT. Oh, send him my way. Send him to the website. a lot of people haven't heard of COT in retail. Uh, the problem with COT, everybody in trading, all they're doing is looking for an edge, right? And what they want, everybody, is everybody's looking for the Holy Grail, right? COT is too complicated. The Holy Grail is an indicator that puts an arrow on a chart and tells you when to hit the button that appears up there for long and short. Everybody's looking for that. When you ask someone to spend some time looking at fundamentals, reports which have 500 columns of data in them, and all that sort of stuff, they're not interested. Doesn't draw an arrow on the chart. Doesn't put a squiggly line there that crosses over this point where I need to do that. That's why I think retail shy away from it, because they don't have the time to understand it. They want to just make money. So if you have heard of it, a lot of the people just don't pay any attention to it. And it's not the be all and end all. It is just part of the bigger picture. But if he hasn't heard of it, yeah, he needs to go and learn about it. But then there's two types of traders in this world. There's the ones that get into trading and want to learn and want to understand how the market works, which is how you know how to make money in the market. You need to understand how it works. If you don't know how the thing works, how can you possibly make money out of it, apart from being lucky? And then there's the people that just want to make money by buying stuff that makes arrows appear. If you buy the right thing that makes an arrow appear, you're halfway there. But if you don't understand what that is doing in the grand scheme of things, and you start to take every single one, which is what I get, all the negative reviews I get on MQL5 on the market reversal alerts indicator are, yeah, it took 15 signals, 9 of them didn't work. Of course they didn't. What are you expecting? Every time you press this button, it's going to do that? Of course it's not. Were you trading in line with trend? Were you trading in line with sentiment? Was the RSI extended? What was the reason for getting in? This is a signal indicator. All it does is it tells you when there's a market structure shift. That doesn't mean you've got to buy it. It's just telling you that something's happening. Those are the types of people that, I get it all the time in Telegram. Why is the EA not taking a trade? Well, what have you set it up to do? Well, I don't know. I just wanted it to go long and short. Have you read the manual? No. Right. So you've got the most complex EA on the market and you haven't read the manual. It's like getting a car, getting in it, never having had a driving lesson and expecting to be able to drive the thing. You need to read a manual. Those type of people won't heard of COT. But everybody's on a different stage of the journey, aren't they? Yeah. So you, at some point in your trading journey, you will come across COT. People don't get the futures market as well. That's the other problem. When you mention futures to people, they're like, what? It's not crossed with anything. No, it's not a Forex pair. It's the futures market. People can't get their head around futures a lot of the time. It took me ages to understand what futures are. And the thing that really scares you with futures is when you actually take a contract long in futures on oil, for example, you're actually buying a barrel of oil. If you don't get out of that by the end of the expiry date, they will deliver a barrel of oil to your door. Because that's what you're doing. You're actually buying. You're saying, in the future, I want to buy 1 barrel of oil. It's what futures contracts are. You are paying for delivery of something at an expiry date. It's complicated stuff. That's why people don't want to know about it. But that's why I've put it on the website, and I've kind of broken it down into the simplistic. If you look at the actual COT page on the website, it explains what it is in a very simplistic way. This is all you need to know. That bit there is all you need to know. If you just want to know how to use the thing. But it won't tell you when to press a button, and that's the problem, isn't it? People want to know when to press a button. DAX is still trying hard up there. They missed that much. I'm not that upset about that today. They'd rather use signal services and lose more, yeah. Morning, Sebastian. David, on the trades you get in per the sentiment, like the CAD Swiss, does the EA wait for an RSI extension or get you in on a reversal alert? So I use it in different ways. So what I'm doing today is I am literally just getting in on the next reversal alert. So with the EA, what I had set up, Euro CAD, I've just got in long as well. What I had set up was waiting for an RSI extension. So what I'm looking to do with the sentiment trades is wait for an hourly RSI extension to the downside and then go in long. Yeah. But what I'm doing today is literally just saying, just get me in long and scale me in long. I don't care about RSI today because these trades that I'm taking on sentiment today are nothing to do with RSI. Relative strength today has got nothing to do with anything. This is a fundamental day. If the euro is going to be bullish today, it doesn't matter how strong it's been, it's going to go. Or if it's going to come back down, it's going to come back down. It doesn't matter where RSI is. RSI measures relative strength, and what we're looking to use RSI for is to find exhaustion points where profit takes will start to get the profit take move with the banks. The banks, if they've been pushing hard in one direction, like we have with this morning, if the euro has a massive negative, doesn't matter where the RSI is in this is just going to go. So today, the EA is just getting me in long on the euro on every reversal alert. So for example, on the euro pound, which I'm in now, if this thing comes down here, by the time we get the announcement, I'll be getting in again. So it's just going to get me in long. Every time we get a reversal alert to the upside, a market structure reversal, I shall be jumping on. But what I'm working on, the sentiment EA that I'm working on, that's the wrong button. This one, what this will do is it will take the sentiment. This is actually trading CAD Swiss at the moment. I'm using this as an example because obviously that is massively extended, isn't it, the CAD Swiss? So you'll see this will pull in the CAD Swiss sentiment data. So the backtester, because it's got to do an HTTP request and it needs to wait for the HTTP request to fulfill. So there you go. So we've got 96.4 showing up there in sentiment. Wait for that to upload. There you go. So 96.4. So it's putting the sentiment in from the website. That's caught. There you go. 96.4. So it'll only take shorts. And I'm working at the moment on the 4-hour, yesterday's high, and the weekly high. So what I'm testing at the moment is in line with sentiment. So obviously 96% of the market is long, so I only want to take shorts. So this is taking a short there because we've pierced and closed below the 4-hour high. So and then obviously it will get me into additional positions as well. So there you go. That's in. Going short again here because we broke the 4-hour high, broke above and closed below the 4-hour high. So I'm just looking for areas where there's going to be support resistance. They're obviously going to be at the highs and the lows, the daily, the weekly, and 4-hour. Those are your strongest support resistance zones. So that's what this is doing. So again, this isn't waiting for reversal. Let's see you go. So the reason it took that one there is because it's more than 86. So I'm using ADR as a measurement of distance. It's more than 86 away from the initial entry. We got a signal to go long and to go short because we broke last week's high. It got out on that position there. And it would get out on both of those, obviously, in that situation, but this is, under development. So I don't think with sentiment, it matters because the reason we're using sentiment is to find out where the liquidity is. So if everybody is one direction, the liquidity is there. So when they got in, they will have formed, and usually they would have got in just after the peak of a 4-hour high, a daily high, or a weekly high. Yeah, that's why I'm using those. So if you look at where everybody went long on the euro pound down here, we've got this level here. Yeah. That black line there, if we go out to the 4-hour chart, That's a 4-hour low. It's also a low, a previous day's low. If I go down to the hourly, you'll find that is also this blue line here. You can't quite see it, the dotted line. Yeah, that is a yesterday's low. So yesterday's low, 4-hour low, weekly low, that is where we find liquidity. So those are the areas when we get to them, I want to be entering. So, you know, like the CAD Swiss at the moment, I'm selling it down here. This is obviously not taking a trade with that, but where is the liquidity right now on the CAD Swiss? Yeah, let's go to a 4-hour chart. The liquidity is at 4-hour highs. So there's some liquidity there. Let's draw it on so you can see it. There's some liquidity there, and there's some liquidity at the daily high, which is there. So these areas are of interest. So if we push up into this propulsion gap, 4-hour high, I want to be in. If that doesn't work, if we get up to yesterday's high, we will also be extended at ADR. And again, that's something I might add. I'm not sure. I don't think you need it. If you get into the previous day's high a lot of the time and you've had a push down, you're going to be extended on ADR anyway. It's just another way, isn't it? But yesterday's highs and lows. Yeah, look at the low there. Sweep, bang, there's our entry long if sentiment was against us. Previous day, bang, short. Yeah, this is going to become a liquidity pool for longs. So if this does this today, that's yesterday's low. We know that there's liquidity there. But we want to be doing it the opposite direction to these guys, because these guys are putting the liquidity in the market, and that's what the banks are going to go and grab and run away with. So that's all the EA does at the moment. It just hunts liquidity pools, and I'm position trading them. But you can use stops. You can do whatever you like with it. I mean, it's in development at the moment, so it's, you know, it'll change. But anyway, what was I talking about? RSIs. Where did we get to? Euro US dollar. Did we cover that one? Yeah. Pound odd. So pound odd is a 1-hour RSI extension to the downside. Again, you know, anything today to do with the pound or to do with the euro, you've no idea. It's all to do with the interest rates and what the reports say and what the press conference comes out with. So, but there is a mean reversion opportunity there. There's quite a long way to go with this as well. So again, look at this here. Yesterday's high, that there. That's the previous day's low. Yeah, but you know, whenever you're moving on a 4-hour chart, because there's only 12 candles in a day on the 4-hour chart, isn't there? 4, 8, 12. Sorry, 6 candles in a day. Can't do maths today. So there's only 6 candles you've got to play with in a day. The chances are 1 or 2 of those candles are also going to be yesterday's high and low, aren't they? So that's the other reason with the EA I've put triggers in it for entry criteria. So I put all this in there to test it. I don't necessarily think the 4-hour high might not be needed, because these 4-hour highs and lows are very much most of the time going to be yesterday's highs and lows as well, because the 6 candles, chances are one of those 4 hours is going to be the high of the day or the low of the day. So all you're going to do is really duplicate up here, really. So, but again, I haven't tested it. So in development. So euro pound, there is a mean reversion opportunity there. Obviously, if we get that, pound odd, if we get that positive news coming out of the pound, we will get some movement to the upside on it. Obviously, it could go skyrocket. I might be wrong. You know, Bailey might come out today and say everything's fine. I don't know what the IMF are on about. We're definitely not going into recession, and the market will go, all right then. But it's whether you believe him or not. I don't. I live here. Ash, so you have accidentally had a barrel of oil delivered to your doorstep? No. No, I haven't. I trade futures with prop. when I trade futures, and you have to close your positions by end of day. But if you bought, so if you wanted to buy a futures contract and hold it to futures expiry, you would get a barrel of oil delivered, because that's what you're buying. So yeah, and the same with, like someone just said, about pork bellies. Yeah, if you trade in pork bellies, like Franco's just said, a truckload of pork bellies on your doorstep. If you invest in pork bellies, you get pork bellies. Gold futures, you'll get gold delivered. You're buying it. That's the whole point of the futures. You are entering a contract to purchase, and that's why you can only buy contracts. Yeah, so the minimum is one contract. You can buy one contract for whatever you are trading. So if you buy a contract of US dollar futures, when that futures contract expires, you will get dollars delivered to you, in theory. No one ever does, obviously. It doesn't happen that way. But the futures market was set up for predominantly the agricultural industry to offset their risk. So if you are a corn grower, you will have your corn crop there, which is worth $1.5 million or something when that corn is going to be harvested. So what you would do is you would set up a futures contract to sell your corn at 1.5 million. If the price of corn changes dramatically by the time you make your harvest, it won't affect you, because your hedge on the futures market will make you the money where the corn will not make you as much. So that's what the futures market is predominantly used for hedging. Yeah. So this is why you find hedge funds are filtered out. The commitment of traders data you see on the website filters out hedge funds. So I use what's called the non-commercial market participants. So this is non-commercial positioning. These are not hedge funds. Hedge funds are classed as commercial participants. Non-commercials are speculators, banks and institutions that are placing futures contracts to expire at a profit. So these guys are buying euro futures contracts. When they expire, they expect the euro to be at a higher price than when they entered the contract. They're speculatively looking for a profit. So if they're buying, expecting when the futures contract expires to be higher than their entry price, we know they're long. They're long, and these are the guys that have got the money to move the market, the banks and institutions. We want to be on board with them, don't we? That's all it is. It's just a directional bias. But a futures contract can last 3 months. So this thing could go down for 2 months and then have right? So for that 2 months, this could be totally wrong, which is why it's not a timing tool. It's something to help you with directional bias. I mean, it doesn't do that. It doesn't do that. But it doesn't mean it's going to go like that all the time. It means that is what they're speculating on. We don't know where they are, where they're in, what price they're at, how many contracts they've got. We don't know. Well, you do know that. It's all in the COT report. But again, data overload. Don't need it. Don't need to know that much information about it. We've got DAX coming off the highs now, ADR. So we've got an ADR reversal. Look at that. Beautiful hammer at ADR. Bearish engulfing, off we go. I might, oh man, I like the way that EA looks. Yeah, it's working. I'm working on it. It'll be a while yet. I've got to live test it. It's almost ready for live testing. So I might live test it on a prop account. I'll probably live test it on demo, to be honest. What would be the best first start using your programs, tools, setup? I live in farm country. Get farm commodity reports on TV early in the morning. Yeah. The best first start using my programs? You mean products? Market reversal alerts indicator always. Market structure is king. Price action is king. Market structure is a result of price action. So when you're trading and analyzing any pair, price action is the most important thing. Yeah. Because price action does not lag. Yeah. So when this candle goes down, there are more sellers in the market than buyers. Fact. That is why that candle has gone down. So that price action of going from there to there tells you we should be shorting it right now. So you always look at price action because it never lags the market. Every indicator on the market lags price action. So you always look at price action. Price action then forms patterns which repeat themselves. And those patterns are generated by market participants selling and exiting positions, and then selling, and then exiting, and then selling, and then exiting, buying, and exiting, buying, and exiting, right? So they create patterns in the market, which we call market structure. So when there are buyers, it goes up, up, and then it comes down when they exit their positions. Then it goes up as we're buying, and it comes down, and it goes up, and it keeps going up until it comes down so much that we get a move below where we've been moving up, which we call market structure break. And that is what the reversal alert indicates. So it takes the last batch of sellers in the market. In that case, it was that candle there. Yeah, so we know sellers entered the market there. So we want to start paying attention because there's sellers in there. But the buyers beat those sellers. So this is where we tried to start forcing a move to the downside, but were unsuccessful. So we'll start looking around this area to see if when we do manage to break that level, i.e. these sellers that started to sell hard here do actually get some traction, that's when we want to pay attention, because when they win out, there's a chance that the structure is going to bow back the other way. Yeah. So price action, then patterns, market structure. If you understand price action, what's going on inside of a candlestick, and you understand market structure, you're halfway there. Then all you need is a directional bias or a reason to get in a direction. So we know that when the market is pushed too hard in one direction, it can't sustain that rally because there's not anybody else left up here that wants to sell to them because they've just run out of sellers. So the buyers can't buy anymore. So they go, right, okay, well, we've got 1.5 million on the table here. Let's start getting out of it. So they start selling it. The buyers take their profit at an area where the relative strength of the move starts to wane, which is what we use the RSI for, to measure how strong a move has been so that we can start to look out for that profit take move happening. We never know when the profit take is coming because we have no control over it. But you need a signal indicator that shifts, that tells you that there's something going on the other direction after we've had a strong move in one way. And that's basically it. That's the core of my strategy, is RSI. Because, and this is all covered in the Bootcamp, which is on the website, which is on YouTube, whatever, whichever way you want to look at it. Once you've got that relative strength move, we know that the market is stretched. Again, elastic band theory is all covered in there, but the further it stretches, the more extension we get, the faster the snapback is, because you've got more participants making money. And as soon as that starts to go, look at the speed of it. Yeah. And this is why I've said this many times in here. We climb up the stairs, we fall down the elevator shaft. The reason we fall down the elevator shaft is because of fear. If you've bought it here, you're seeing your profit, your P&L going up and up and up and up and up. And all of a sudden it goes down quite sharply. And you're like, oh, maybe I should get out here. And then it goes down really sharply. And you're like, I really need to get out here. So everybody then starts to sell. And that creates a selling frenzy, which is why we go, oh, it's really hard to get up these stairs. Everybody's selling, get out. Because you started climbing the stairs there. If you don't get out here, next you might get out there. And if you don't get out there, you might get out here. And you've wasted that whole 3 days not making any money. So you get out, and you get out fast, and everybody gets out fast, and it accelerates the speed of the drop. The further the elastic band is stretched, faster the move tends to come. And they are quite often triggered on news. which is why we pay attention to fundamentals, because that is what drives the market. That's what drives the profit take moves. Yeah, if you've been buying the crap out of something and all of a sudden they come out and go, actually, we're going to change the interest rates, you're going to be like, what? Oh, don't want it anymore. Bang. So the news isn't the actual thing that makes it happen. It's the market participants going, don't fancy it anymore. I'm getting out because I've made a ton of cash. That's what makes the move start. The spike on FOMC is made by people buying and selling, not by FOMC. You need to understand the underlying mechanics of the market, why it happens. And this is what these propulsions are. These show you where the buyers and sellers are. Good one on pound odd here, look. Yeah. We sold a load, we waited. We sold a load, we waited. We sold a load. Yeah. So there's sellers here, loads of them. The market tries to push back. It gets to the point where all of these sellers are. What happens? The sellers sell again. Why? Because they're short. They're not out. They don't want to get out yet. There's no reason to get out, is there? Yeah, we've pushed down. All we've done is go sideways. We're slightly going up. It's like, no, I'm short. Push it down again. Look what happened here. Accumulation. Push. Yeah. We come back down. The buyers here, the institutions that created this large buy frenzy, bought it again. They bought it again. They bought it again. But the sellers who created this move and this move had more money in their banks than these guys did. So they got run over. Bang. Everybody that's long there gets out of their position. That's what creates market structure. Buy cycles and sell cycles. Purchases, profit takes. All we're doing is getting alerted when a buy cycle may be coming to an end. So we need to know when it's coming to an end. And the best way to measure it is when the structure starts to break, i.e. the sellers take control. That's what that does. And this is why, you know, people go, oh, I took a short and it went up. Well, of course it did. And again, what stage of the cycle are we in at the moment? Should we be buying or selling? Is the fundamentals saying to go long or short? There's so much goes into it. Everybody's looking for the arrow to make you £1 million. You can't do it. It's not that simple. This is a massively complex machine with many moving parts. And I liken it to brain surgery or flying a plane. Yeah, those guys get paid 60 to 100,000 a year plus. Why? Because it's a really complicated job. If you want to earn 60 to 100 a year, what makes you think that an arrow on the screen is going to do that for you? It's not. There's no EA out there that can do what you can do. You need to learn it. And there's no shortcuts, unfortunately. There you go, lecture over. Pound Swiss. I looked at this one, still coming down. Yeah, they're not happy with the pound still, or they are happy with the Swiss franc. Let's have a look. So the pound is weak. Yeah, they're not happy with the pound, are they? At all. Swiss franc is very strong as well. Yeah, so we've got money starting to flow into the euro and flow out of the pound. Yeah, ahead of the news. We've got 2.5 hours until the pound. Pound New Zealand. I'm short. So this is extended on the hourly. Again, you know, what I've just said. Yeah, this on a normal day, I would be buying this. So I would be coming over and looking at, right, Pound New Zealand. What do I want to be doing on the Pound New Zealand? Pound New Zealand is a massive sell. Do I want to buy this? No. So I would be ignoring that. So get a signal to go long. Look at the fundamentals. The fundamentals say sell the crap out of it. Not interested. You can. It will mean revert. Probably at some point. More likely there. Why? Because it's a weekly low. Why? There's liquidity there. The market needs liquidity. It needs to go and find it down there. Think of yourself like a bank. You've walked into the bank in the morning. Your boss has said, we've got a couple of orders in for pound New Zealand transactions. Can you get these executed for me? No problem. How much you got? 3.5 million pounds needs to be converted into New Zealand dollars. No problem. I need to sell it. So you sell it, and then there's 100k of liquidity sitting there. So you go, oh, I'll have that. And then there's no more. So you can't go any further. You can't sell it if there's no one there to buy it. So then there's 50k sitting there. You grab that, and you just keep grabbing it and grabbing it and grabbing it. All the time there's people down here looking to buy the pound New Zealand. You will keep selling your stuff to them until you've run out of that 3.5 million. If you can't find it, you know there's a load of it sitting here. So you will push the price down with the market maker desk to get to that level. And then you execute those orders. That's all gone. And you'll go, right, brilliant, done. And all of a sudden, because you are taking your foot off the gas, that pressure is disappearing. The buyers have now got a chance to pull back. And what do you also need to do now you've made that move? Get out of it. So bang, the speculators will then take their profits on the move that's just happened because they jumped on board with you. And that's where it all goes back the other way. But usually it's got to get to somewhere. Support, resistance. Zones, areas. It's just places on the chart where you'll always find prices attracted to, like a magnet. That's why the propulsion gaps work. Look. Accumulation, break, add, out. Why? Because this is where the seller stepped in. Seller stepped in. That zone. Just need to... Doesn't matter how many times I say it. You need to see it. You need to do it. And after you've done it a few times and seen it a few times, you go, wow. It's all about structure, market structure. That's all it's about. Anyway, I'll shut up now. Pound New Zealand. Again, another one. Oh, yeah, we're with Pound New Zealand. I'm in short already. New Zealand dollar, US dollar. So we've got a big propulsion gap. So the question today is, are we going to get some strength in the US dollar off the back of this move? With these fundamental shifts, which looks much better on the hourly chart when you get FOMC, they often will get undone same day. We get what's called an A-shaped recovery, which is basically a return to origin, a return to the start of the move. And then the next leg starts. So it's a case of whether or not we're going to do this today. You can never tell. Sometimes they do them straight away. Sometimes they take days, weeks, depending on what the move is. So the question is the market actually going to continue to sell the US dollar off like it did last night? Or is this kind of a knee-jerk reaction which we're going to fade? And the fade move is a very valid trade. Yeah, fade it down to there if you're going to fade it. The reversal alert on the hourly happened this morning on 15-minute, happened right at the top of Asia. So you've got a lovely end pattern reversal. Yeah. There's one for the arrow, boys. There you go, short it. It'll work lots of the time. If you took every single trade, a lot of them will work, but you won't understand why those ones are working until you pair it with something. It's got to be paired with some condition indicator to tell you why that structure, why go short here, because it's exhausted. Yeah, and this is why the people on the M5 charts struggle, because you can't see anything on an M5 chart. To actually get any idea of what the hell's going on in an M5 chart, you've got to be zoomed right out, because you need to see what's happened before to get an idea of where we're going. Your job is not to get in. Your job is to predict the future, plan where we're going next. Why are we going there? What's the reason? Because I got an arrow. That's not a reason to get in. The reason is because we've got a propulsion move there that's likely to be retested. Why? Because it does. That's what happens in the market. That's what propulsion happens. It's just what happens. That's the reason. The reason isn't not the arrow. The arrow is the signal based on the exhaustion, and the reason because we have a target to aim for. The big picture. You're a solicitor. You're a lawyer. You've got to put a case together to get into a trade. It can't just be an arrow. US dollar Swiss. Tricky one, US dollar Swiss. So it's extended on the 4 hour. Again, same reasoning. Look what's happening here. So we got the reverse alert there. We're in a downtrend, as you can see. This propulsion gap has been tested here, but this is again, this is FOMC, this is interest rates. The reason for this is because there was a sell-off because of the interest rates and what the Fed have said. So you will find that some of these will get orphaned for days, weeks. Some of them never get touched again, depending on whether it's a big shift. But the market is definitely not happy. We've got the Swiss franc potentially today powering up on the euro, which means more downside for the US dollar Swiss. So this is a massively nice mean reversion opportunity, and there's a good probability you're going to get a pullback into there or into there. However, it's really going to depend on what happens with the euro this afternoon. So whether it's a fade today or not, I don't know. But again, you know, with everything you see today, if it's got the euro in it, if it's got the pound in it, or it's got the US dollar in it, there's a massive question mark. Those two, because we don't know what is going to be out in the press conferences or with the interest rates or the monetary policy going forward. This one, because we don't know whether or not this move is real and whether the market's going to continue it or whether they're going to fade it. So everything you see with the three majors at the minute is just up in the air, isn't it? You've got a 50-50 shot. TP's just hit, Franco. Had to move quickly, move dollar. More on the dollar move, yeah, good. The spread's too high on pound New Zealand. If you're trading M5, if you're scalping, yeah, the pound New Zealand you can't scalp. But I don't scalp, do I? So I just trade. I don't scalp. Euro pound has hit target on it. I kind of want to get some back after yesterday. I just want to start banking stuff, really. So my exposure on the pound, as you can see, is overexposed. So, you know, 12 o'clock, this is the decision you need to make when you're in profit on a position. This is the reason I've taken on so much euro exposure and pound exposure today, is because I want to try and get myself into this positive position ahead of it. Because what my goal is either ideally to break even ahead of the news. So this, I've got 2 hours, 2.25 hours. If I break even this trade, there's a high probability I'll get out at break even, obviously. I could close this now and bank it. Obviously, it's 0.25%, which is nice. That gives me 2.25%, which is, you know, 3/4 of yesterday undone. But if that pound reacts negatively, I'm looking at a 150 to 200 ADR move to the upside. So that suddenly becomes $750 to $1,000. So does that pound New Zealand short. That 100 becomes 500. So the question is always ahead of news, break even or take it off. Because if it goes the opposite direction, obviously I make nothing. But that's the gamble, isn't it? You know, and when people call trading gambling, and to a certain extent it is, your decision now is, do I gamble on that or that? I am gambling. I have no idea. No one's got any idea which way it's going, apart from the banks. They know which way it's going because they're the ones that are going to move it. We don't. So the decision I've got to make is, do I take $250? New Zealand dollar CAD just got short, long. Do I take $250 or do I hold out for $1,000? Dances. Did you guys catch Powell spike? Does it look like I caught the Powell spike? I didn't. I had a terrible day. I went to bed last night and I just was like, I need to just go to sleep. I need today to be over. You have days like that. You're going to have days like that. It's good that you see days like that. You've seen, if you've been in here for any period of time, you see that days like that exist. And as a trader, you have days like that. Some of the best traders in the world will have days way worse than that. Yeah, don't forget this is a 100K account. In the grand scheme of things, it's a 3.8% move against me. You can see how easy it is to get it back. I've made 2% already this morning. I've got 0.5% sitting in the bank. It's just one of those things. But I didn't get on it, no. I did get on it. That's a lie. I did get on it. I got on this. I got on a bit of it. I got on some of it. I got on this bit here. No, that's not the right day, is it? I got on that bit. I took it from there, added to there. So I got that much. But it wasn't enough to get back my losses from the DAX. The DAX was the most annoying thing about the DAX is I saw on my P&L £2,000 in profit, and I didn't bank any of it yesterday. That's the mistake I made on the DAX yesterday. I was holding out for the rally, and I was expecting the rally ahead of FOMC, and it didn't come. It just chopped. That's what killed me. But if I was a mind reader and I knew what was happening in the future, we wouldn't be here. Some say Jim Cramer. Don't make me laugh. Bull market is begging. Don't listen to Jim Cramer. My God. Jim Cramer. It's good to watch. It's fun. He's good fun to watch, but no. But yeah, I think the bull market is potentially starting to end because the thing that's giving me the confidence in the bull market potentially, the bull market potentially starting, or the bear market potentially ending. The thing that's giving me the confidence in it now is the IMF and the IMF's prediction on recession. So the bear market is a prediction of recession. The IMF has come out and said that the US is probably not going to go into recession. So there is a good chance that we are going to start to see stock increase and get back to the good old days where you can actually make money out of these. If as soon as we get back to normal on these, I shall be trading the crap out of these. I've got many long only strategies for indices that I trade on the daily charts. I've got one as well that I've adapted to 4 hour, but it does take a bit of drawdown. But this is my pension fund. This is what I get into to make myself money. That was a monster year, monster. But I only buy, and I haven't been running it all last year. I haven't been running it. Nothing I can do because it doesn't work in a bear market. So yeah, I'm all for it. We've just made a new high on the Nasdaq. We are in earnings fortnight though. Yeah, so you can't. I mean, what people are saying is quite rightly. Market structure shifted. Obviously, it has shifted. We can see it shifted. The reversal that's indicated tells you when it shifts. That's the whole point. But we're in earnings fortnight. So yes, we're going to rally. We always rally in earnings normally. Apart from when we were in the bear market, earnings doesn't rally. But so yeah, I think there's a good chance it might be starting to go, in which case then I will start to buy all the dips on the daily and scale into longs. But I need more confirmation. Yeah, this is not enough. Yeah, this is not enough confirmation for me to be in a bull market. We need to be doing that. Yeah, and that pullback I will take. So I need a low, high, higher low, higher high. That's the higher low that I will start to scale into. But we've got to break this high. And ideally, if we can double top that, that will give me a lot more confidence. Yes, because obviously, if you extrapolate these moving averages into the future, a trend, the moving averages in a trend are spread. The moving averages in a range are not spread. Yeah, direction of the moving average is the most important thing. That is telling us we're in a strong monthly move. That is telling us we're in a strong-ish quarterly move. Until we've got that starting to tell me that we are in a very strong 45-degree angle plus, we're in a really strong quarterly move, that's when I start getting interested. We're not far away, look. It's getting there. So yeah, I think we are. I think the US is getting there. But look at the Dow. Yeah, this is November, right? We haven't broken November's high yet. In fact, what we've done is put in 2 lower highs. So we're not there yet, are we? There's not enough strength. But I'm quietly confident, especially because of the DAX. The DAX is the thing that's really helping me make the decision, and the FTSE, look. Yeah, FTSE's all-time high. The DAX is really, really doing a mental job. But it didn't have, look at COVID recovery. Yeah, it came down below pre-COVID levels. None of the US indices have done that. Apart from the Dow, sorry, the Dow has. So the Dow has now returned to pre-COVID and bounced. We were waiting for the S&P to do the same. It hasn't made it. We're waiting for the NASDAQ to do the same. Not made it. So this is the depth of what they were anticipating to be getting into recession. We've missed it. And this is, I think, why obviously the IMF and other people are coming out now and saying, actually, it's looking a bit rosier than we thought. So what we're looking for is that structure shift back to the upside. If you look at that's a V-shaped recovery, so you can't really say that. So this is what I need to happen. Look, some kind of structure break that holds. That's when I start getting interested. So yeah, a V-shaped move where we break structure, pull back, break structure. That's when we'll get started. We're a spluttering car at the moment. But we've done it on some. So that would be my, I think we are going sort of thing. But it's just not quite there yet. It's not enough for me to reactivate my EAs, put it that way. Not quite. New Zealand dollar CAD trade came from the new EA being tested. No, New Zealand dollar CAD, I'm using market reverse alerts EA. So we just got a reversal alert there, look. In 5. So market reverse alert CA took that one. Based on strong retail sentiment, strong COP. Come on, website. Yeah, so New Zealand dollar CAD. New Zealand dollar CAD, Euro pound, all very, very good longs at the moment. Yeah, so US dollar Swiss, I don't know about. US dollar yen, I don't know about. US dollar Swiss, I'd be a bit wary about longing this as a mean reversion today. I mean, it has, the structure break has happened, obviously. Whoops. But, when you get a reversal alert that long, that's not really a market structure break, is it? That's an accumulation. That's why you've got another reversal alert there. That's too long. Too much time gone past. That's not, you can't really take that. Market reversal alerts, you're looking for A-shaped and M patterns for shorts, not push that. That's an accumulation break. So that could be quite easily just a false breakout, long continuation, short accumulation break. It's just not, I don't know. But I mean, look at this. I mean, it's just begging for a fade, isn't it? But that thing at 1:15 this afternoon is going to decide for you whether or not that trade works if you're going to take it. It's out of your control. I had a penny a pip on a trade during the speech just for fun, lost 15 pence. Good job, it was a penny a pip. I wish I'd have done that. Yeah, if I'd have done a penny a pip, I'd have been laughing. I didn't. But then I'm not trading real money, am I? This is prop. Morning, MPA. I want to position trade in a prop firm. My lot size will be calculated based on the max daily drawdown or the total account. I.e., my account is 140k. My max daily drawdown is 7k. My lot size 0.01 every 2k would be 0.7 or 0.03. Right, so have you got the market reversal alerts, EA? Or are you trading manually? If it would be more along the lines, you've got the market reversal alerts, yeah, okay. It would be more along the lines of 0.7, but it's not, your lot size is going to be based on the currency you're trading. Every currency you trade is going to be different. So what I do, this is a 100k account, right? So and it doesn't matter what size your account is. The market reverse alerts EA will automatically scale your lot sizing for you based on your account. So what I use, and there's two ways you can do it. I use 0.5% of my balance. Okay. Thanks for the follow. No name. I won't call you any name then. So I use 0.5% of my account per entry, and my risk is based on ADR, and it's 1 ADR. And obviously I don't use a stop loss, so this is just calculating the lot size for me. So my trades are 0.5% risk on 1 ADR. So if market moves 1 ADR against me, I am on my account $500 in drawdown on that, and then I will start to do drawdown control on that position. But I am scaling into my positions half an ADR apart. So I will only start to do drawdown control really if I'm starting to get into 3 positions or more. But and this is the most important thing to understand with prop, yeah, your lot size is not really important as much as your exposure. Yeah, your exposure is the key with prop. Forget oil. Yeah, so if you are, and I'm overexposed, and I know I'm overexposed, and there's a reason I'm overexposed, it's because I'm speculating on the euro pop. And I'm also testing out some sentiment trades, but the exposure is the key thing. So if you get in with 0.5% risk on a 1 ADR move on the euro, for example, but you take 3 long, you're actually exposing yourself to 1.5% risk on a 1 ADR move against you on the euro, aren't you? Yeah. If you've got 7% maximum drawdown and you get 3 positions at once go against you, i.e. the euro goes against you, the pound goes against you in New Zealand, for example, 1 ADR move is going to be 4.5% drawdown. More than that, actually, because you're going to probably have 2 positions on these, aren't you? So you've got to be careful with your exposure. On prop, the way I passed the first one on prop was I made sure I had no more than 2 positions on. That's the way I trade anyway. I don't expose myself to more than 2 positions unless there's a real reason for it, like today. So, and I will be out of these. You know, if this goes wrong today, I will be closing these. I'll be taking losses, and I'll regret it. But the only reason I'm getting aggressive today is because I just did something stupid yesterday. But so yeah, I don't. If you want to be safe, go with 0.25% risk over 1 ADR. But what my goal is, the way that I'm trading at the moment, is I'm banking every time I get to a quarter of a percent, I'm putting it over here. So I bank every quarter of a percent I get on. So if you wanted to, you could set the EA up to bank a quarter of a percent for you. So in the, I mean, you could use a TP if you want. I mean, the obvious thing to do, the easiest way to do it is to change TP mode. Oh yeah, no, sorry, keep TP mode at ADR, and set your ADR TP multiplier to 0.25. And then it will automatically, obviously, close every trade for you at that level. But I'm using 2 ADR as my TP because it doesn't get hit. I close it out way before there because I just do it manually. But I'm fortunate that I can sit in front of my computer all day long and trade. So if you're not, you need to set the EA up to do what you want. But it took me 13 days to pass stage 1 position trading. So yeah. How about if I want to trade manual, should I use the drawdown margin to calculate the lot size? So your drawdown should be done on your drawdown. Your drawdown control should be done on drawdown, obviously. So my trigger with prop, this is different to my personal account, but with prop, my trigger for drawdown control is if this gets to 1%. So if I have one instrument at 1% drawdown, I then start to think about scaling out. 1.5 is what I would really start thinking, But ordinarily, I wouldn't have this many positions on. I would have no more than 4, 5 positions on at a time. I wouldn't go above 5 positions, really. Because I've got a 5% daily limit. Yeah, so, you know, if I have 5 positions on and they all go against me at exactly the same time, that's 5% drawdown. Pop. That's it. Done. Blown it. Your position trading, you've got to keep it tight, which is why I say 0.25% is probably a little better. I'm being aggressive, but I'm also being aggressive with my drawdown control. Again, there's no way to really, there is no magic setting for the EA. There's no magic way to do this. It's totally out of your control. Yeah. What the market's going to do is what's going to decide whether you pass or fail your evaluation. All you can do is give yourself the best chance of not blowing it by keeping your risk tiny. 0.25% is keeping your risk tiny. And then if you're not on top of drawdown control and doing it quick, it doesn't matter. I am over leveraged. I know I'm over leveraged. I admit I'm over leveraged. But I'm also getting on top of drawdown control very, very fast. You know, in these positions, euro pound, that'll be break even by the news. And if that is back to 0 by the news, I'm closing it because I'm over leveraged. I'm not going to be over leveraged through the news. I will be break even on stuff that is in profit. I might bank stuff. I might just bank this anyway. Franco, only revenge trading. Yeah. Yesterday. If you were in the live room yesterday afternoon, you know I was beaten up by the DAX yesterday morning. And then in the afternoon, I got beaten up by the NASDAQ. Yeah, when FOMC came, I was like, screw you, market. And it did screw me. But I'm going to go and download this. This is a very, very important document. And I'm going to reread this today. Yeah, because what I did yesterday was I went from that to that, which bumps me back down to that. Yeah. Stage 5, autopilot. That's me. I just get in, get out, bank money, and I just do it unconsciously every day. Yesterday, I got beaten up and I got to step 4, walking on water, where I thought I was invincible. FOMC taught me I'm not invincible. That pushes me back to incompetence. So now I need to get myself back to conscious incompetence, which is understanding I'm incompetent and I did a stupid thing. And then it will allow me to move on to the eureka moment, which is, I know the eureka moment already. Don't be an idiot in FOMC and try and news trade when you're down. So I'm actually already back up to walking on water because I know for the last 3 years I've done nothing but make money. So I'm actually back on autopilot. All I did yesterday was I went from there to there, and I've reset myself this morning. Go and read this. It's a very important document. And everybody of you that reads that goes, and they know exactly where they are. Helps you identify your mistakes. But yeah, it was silly yesterday. But and that's the thing that annoyed me. I haven't had a day like that for a long time. I haven't let the market get the better of me for a long time because I know the edges are there. What I did wrong yesterday was I watched my trades playing out too much, and I was manual trading yesterday using the Price Action Toolkit. What I did yesterday was I got into profit of around about 1/4 to 1/2% on all my positions, and I hit that one of those buttons there. I hit either the break even button or the break even average button. Every single time I did it, I stopped out at break even, and I had 1/4 to 1/2% of profit probably 5 or 6 times yesterday. Add that up. I had 2.5 to 3 grand in open profit over and over and over again throughout the DAX and the NASDAQ session. And I let the whole lot go back to break even. And the final trade, which I took in the live room, I said, didn't I, if you were here, I was down $1,400. And I was like, sitting there in 750 profit. And I was like, this is either going to go bang the opposite way and lose me 750, or it's going to run and I'm going to get all that money back. And that last trade I took went back and took me out for 2,250. So the whole day I was sitting in profit, and I let myself take a 2,250 loss. And that's why I went mental on the FOMC. I didn't get mental on it, obviously. I only lost another grand, but it's 1%. You know, I talk in numbers. 1%, it's a grand. It's 1% of my account, though. It's a tiny amount of my account. I've got 100 of those. I've got two of them back already this morning. You know, it's not a problem. It's just that's the key. Identify, understand, don't bloody do it again, you idiot. You know, everybody does it though. You know, I've been watching many other traders who are very seasoned, and the other traders I know. I've had emails from one of the guys I was in the Turtle group with. He's French, and he emailed me before Christmas, way before Christmas actually, before the end of the summer, and said I've done something really stupid. And I was like, what? And it was one of those emails, you know, like when you have, you know, like on Telegram, you have a chat with someone, or you're using WhatsApp and you have a chat. It was one of those email. We only talk by email, and it was one of those. I've done something really stupid. And that was it. And I was like, I immediately replied back, "What have you done?" It was like, I did something really stupid in my trading account. Didn't tell me what it was. I was like, right, what have you done? And it was like that type of conversation. Like, for God's sake, man, tell me what you've done. And basically, he did exactly the same thing. And he was like, we're like we went through the same mentor together years and years ago. And we kind of like a support group for Alcoholics Anonymous or for stopping smoking. When we both make a stupid mistake, we email each other and go, oh, I did it again. And every time we talk to each other on a negative, and it just reminds us that we're not the only people that do these stupid things and go through this. Everybody does it. And this guy used to work for a bank, and he's a very successful scalper on indices. He only trades the S&P, nothing else. He trades futures and CFDs, and he uses RSI and he uses propulsion. Very similar to me, but he's better than me at scalping, to be honest. Way better actually. But he makes well over 6 figures a year. You know, multiple 6 figures. And he does the same thing. He has days like that. You know, Tom Hugard, you know, if those out there that know Trader Tom, he runs a Telegram channel. He trades massive money, you know, hundreds of thousands, millions, that sort of stuff. I don't follow Tom because I'm in here. But I've seen every now and again I go in his Telegram group and I see things, and I've seen days where he's lost 300, not 300 grand, but he's down 60 grand, he's down 25 grand, and doesn't get it back. And half of the battle becoming a successful trader and doing this long term is the fact that you just go, right, screw it, muck that up. Today is a new day. What happened yesterday has got nothing to do with today. Just prove that fact. That is gone. Done. Now I'm focused on, I'm 2% up today. Let's milk it. Different day. That's gone. Can't do anything about it. The difference is on prop, I have to worry about that a lot more. On my own account, I couldn't give a monkeys. Just another day. On prop, I've got to be careful because I've got a maximum that I can do that for. So you just have to retrain your brain a little bit. But anyway, yeah. So to answer a very short question, oh no, Lee, revenge trading. Yeah, that was the long answer. We can't win every day. Yeah, no, you can't win every day. No one wins every day. The market's not that nice. But, we've seen it, haven't we? If you've been in the live room with me for any period of time, you've seen my P&Ls have days, I have weeks like this. I have weeks where I sit here and I go, 1.5%. Is that literally all I could get this week? And then I have other weeks where I've banked 10%. I've had 4-5% days on position trading. Yeah. The market gives you what the market gives you when the market gives it to you. You have no control over when you get paid. You get in and you hope that the market is going to be on your side today, this week, this month. You have no control over whether you get it right or wrong. It doesn't matter whether cut long on something and retail or short on something, so you're going long on it. If the market wants to drive it down for any reason whatsoever and continue to do that for 3 days, it will do it. And it will teach you that lesson over and over and over again. The DAX spikes crazy. I get out. And I said, didn't I? This is probably going to push further because I've seen it do it. It doesn't matter how extended an RSI gets, it can get more extended. If it's up there at the 90s and we haven't seen it there for ages, it can stay there for days. Yeah, there are exceptions to everything in the market. Every time you think there's no way that can do that, it does it. Because it is the market and you are just one tiny little speck of dust riding on a train. And that train is going where that train is going. And the guys driving that train don't give a monkeys. They don't even know you exist. And as soon as you accept that fact, that's why that video is on the website. It's the one that everybody needs to understand and read and watch. Yeah, that is the most important video I ever made. It was one of the very first ones. It's absolutely terrible. But it's the most important thing that I learned from my mentor was to forget everything. Just hit the button, right? And deal with it. Yeah. Deal with it. You're in. Deal with it. Where this is going now, I have no idea. I have no control. I have no clue. It's going up or it's going down. I actually would rather hit the buy button there than the sell, but anyway, it doesn't matter. But I'm basically on a train now. The doors are shut. I can't do anything about it. The only thing I can do now is exit this position. And that's your job. Pick a direction and exit the position at some point. That, as long as you can do that in a way that has an edge long term, that is all you can do. But there's no way if I, and this is where the scalping thing comes into it. Yeah, scalping is exciting, it's fun, and you can make a lot of money in a very short period of time. Look what I just done this morning. You can do that very easily. However, you can do that very easily as well if you are not controlled. And that's the problem. The psychology is why everybody concentrates on psychology, which is why I built the bootcamp, because it takes the psychology out of the equation. If you can remove that bit, you've got half a chance, haven't you? Anyway, I don't want to trade that. Right. I'll leave it there. So be careful today. Euros, pounds, everything. I am speculating long moves on the euro. Pound, I am less sure. We could go long, we could go short. I suspect, I mean, we will get a whipsaw, obviously, regardless. The market has already factored this in. So that is where the important information is, and here, the bank votes. So if I can never remember which order these are. So these, I think these are increase, these are stay the same, and these are decrease. I think I can never remember. The first number is how many voted to increase. The second number is how many voted to decrease. And the third is to stay. Right, sorry, so it's the other way around. So it's increase, oops, decrease, stay the same. Yeah. So what we, this is obviously changed last time. So this last number here is the put the brakes on interest rates number. No one is going to say this won't change. No one's going to say decrease rates. Yeah, inflation's still going up and weird stuff still. So it's how many we get here. So the forecast on this, as you can see, is always the same. Yeah, the forecast is it's no, that's just not necessarily true, is it? That if we get leaked information, you know, if somebody comes out from the board and says, I am going to vote for no increases, that figure will adjust. But at the moment, we're expecting it to stay the same. If we suddenly get 4 here, that is a massive vote for stopping increase in rates, which will be massively negative pound, because we're not in any shape or form near enough to stopping rates yet. Inflation is still at 10%. Yeah. Look at our inflation, it's just nuts. 10.5. It's coming down by 0.2%. That's not quick enough. So that won't happen, I don't think. But if something like that was to happen, you're going to see a big move on the pound today. So I doubt it. But what comes out in the monetary policy report and the statement, the summary basically, which is kind of Bailey talking, if you like, which is equivalent to the press conference, that's what we're going to get the movement on. So we'll see. But Lagarde's been nothing but bullish, and Lagarde has said nothing but we are going up by 0.5% constantly over the next 3 months. We are going 0.5%. She's come out, she said it. Somebody else came out and said we don't think we're going to do it, and she came out the day later and went, don't know what that bloke's talking about. I'm in charge. We're going up by 0.5%. So euro, I'm expecting the market to factor in almost immediately a 3.5 forecast, which should be bullish euro. It's just whether or not we get that on the negative move on the pound. So we will see. But 12 o'clock today, 1:15 today, and then 1:45. Yeah, I'll be back at 2:20 for the New York session. I will obviously have a look at what's happened. But also the other thing is we've got Lagarde speaking later, but as you can see, that's an orange. The ECB press conference, Lagarde is there talking. So anything she says at 3:15 this afternoon, she's already said it. So. You are Franco. Trades loaded and set. Going to sleep. Good luck. Yeah, good luck. So I'll be back this afternoon, 2:20. I will be watching all of this, and you know, I'm managing this. I might take some losses on it. I might not. I don't know. We'll see what happens. But I'm certainly expecting some movement this afternoon. Oops. Okay, so I'll be back at 2:20. We'll have a look at the fallout, and then we'll get ready for the New York session and see if we can milk the Nasdaq. Hopefully, the Nasdaq will move as well. We should get a really good session off the Nasdaq because we've got Facebook movement, and then we'll have all the speculative entries on this lot. Yeah, so there'll be all the Amazon, Apple, and Google speculators will be in there today, and then tomorrow morning we'll have all the Oh, did we go the right way or the wrong way, guys? So huge earnings day today. Biggest on the calendar today. So I'm expecting big things off of the NASDAQ this afternoon. So hopefully we'll get another session like the DAX. So pre-market 15 is what I'm playing. Let's go. Let's get a 5% in the bank. Right, I'll be back this afternoon. I'll be in the Telegram group if you need me. Other than that, have a good morning, and I will see you later.